I'm James Sweeney, and here is your morning market brief. As always, we first begin overseas, this time with the major Asian Pacific markets, and they were for the most part trading on the upside, with India's Bombay Sensex index rising roughly 2.11%. European markets also are trading on the upside today, this coming despite a downgrade to Italian debt figures by the Standard & Poor's, and U.S. stock futures are pointing higher ahead of today's opening bell. Now, the S&P late yesterday announced the downgrade of Italy's credit rating to A from A+ with a negative outlook. The ratings agency did state that the country's weak economy was driven due mostly in part to the government's austerity measures, a lack of governing coalition, as well as its debt figures continuing to rise. Now, keeping in line with Europe, German investor confidence fell to a reading of negative 43.3 in September from negative 37.5 in August, reaching its lowest level since December 2008. The decline in confidence so far has been largely attributed to a steep decline in GDP figures for the nation, as well as the impending default or the impending debt crisis in the Eurozone region. Meanwhile, in the United States, housing starts for the month of August fell roughly 5% year over year to come in at a reading of 571,000. Now, going back to Europe, Greek Finance Minister Evangelos Venizelos is expected to hold a second teleconference today with the Troika. The Troika being comprised of the EU, the ECB, as well as the IMF. And Bank of China halted its foreign exchange swaps with European banks because of sovereign debt issues in Europe. Some of those banks have included, we have Societe Generale, Crédit Agricole, and BNP Paribas, as well as Moody's, and its downgrade of some European banks have suggested that that is part of the reason for the halt of the swaps. Meanwhile, in company news, German airliner Deutsche Lufthansa AG lowered its 2011 earnings outlook, citing mostly weak passenger operations and economic uncertainty heading into 2012. And Spain's treasury sold roughly $4.46 billion in 12-month as well as 18-month treasury bills. However, the yields on those bills have continued to soar.